Hello, this is Martin from seekedge, the channel for investing and trading. Welcome to the weekly market analysis for June 21st, Monday 2021. Let's see what happened. What a week it was. What a crash it was on the last day of the week. A bearish candle after 5 continuous bullish weeks. Still, it made another higher high and an all-time high. The weekly spinning top candle is what you see on the weekly charts, and it's bearish. The latest daily candle is a hammer. It looks like it's slightly bullish, right? But only on confirmation, since it happened, the hammer happened during a downtrend, but a small downtrend, not a real downtrend. Nifty moved up 2 days, and then 3 days of 450-point correction was what happened. No one, the harshest one was on Friday when it dipped to 15,450 from 15,750 levels, right? And after that it recovered, and it was a V-shaped recovery that happened back, gaining back the momentum and then settling close to 15,683. Banknifty had 1,500 point correction last week. It recovered 650 of it and then closed above the just below the previous close. Banknifty also has a spinning top, right? It's bearish in nature. Banknifty has had 2 days of up move last week and 3 days down move. That's a summary of the price action that happened yesterday. Look at what we talked about. See the hammer, right? So Nifty and Banknifty, there is a correction. Here I had mentioned that Banknifty has a spinning top. Banknifty also has a hammer, right? So that's the candle pattern. Both of them are hammer. So that long wick is the Friday move that happened. It moved down and then here it fall down. Last week it fall down, right, from the moving average. And this is the candle pattern we have. So that's the daily candle pattern, right? So what is mentioned here is correct. I'm sorry. So the daily candle has got hammers, right? And weekly has got spinning top on both. The spinning top candle is slightly bearish, right? Especially when it is on trending upwards on the Nifty. While on the daily candle, you have hammer both sides. So hammer on a down move. Both the indices, if you see, it's on a down move, slight down one, not a big one. So that way it could be a trigger for an up move, that hammer pattern. That's what we can read about the rebound of what happened in the last week. Now let's look at the support and resistance. Last week, supports 15,600, support to 15,300, 15,500, support 15,000 and 15,250. Resistance 15,900 and 16,000. Support 1 is because it's a previous swing low, previous resistance, and 20 DMA. Fibonacci 23 support you see at second support, and the previous, which is also a previous resistance. Support 3 is the previous resistance, and the 50 resistances are all-time highs, and there is a correction here. Also 5900 is not the all-time high, so it's a previous resistance area. That's why, right? And if you move, look at the Banknifty, 34,600 is the first support, 33,300 and 33,600. Both of them are Fib 23 and Fib 38 respectively, and they are previous resistance areas. Support 3 is a Fib 50 level, right? Resistance of previous resistance, which is at 35,600 and 30, between that band, 35,800, that range. And 36,500 is the second resistance, and the all-time high is 37,700 for Banknifty. So these are the support and resistance levels, right? And let's see in the charts what we're talking about, right? So supporters, you look at the support and resistance levels, it's masked here. Support 1 here, support 2 here, and support 3 here. This is a Fib 33, Fib 38, Fib 50. Upwards all-time high, and then previous resistance 15,980. Bank Nifty support resistances mark. This is the support area, and this is the resistance area 1, resistance area 2. Below we have support here 33. Below that you have 32 levels. Right. This is what we talked about. Momentum in the trend. Momentum is still right. You can see that the momentum is still bullish. Even on the daily, it's bullish. Right. It dipped down in intraday and then recovered back, and then now it's taking a support. So the momentum had a bearish divergence as we discussed on the daily chart, and because of that the price it worked out well, and it's the bearish divergence that brought the market down to 15,450 levels, but it managed to recover after that. So the target for the divergence is met. Now we have bullish positive reverse divergence that could still potentially it can take the market up if it works out, only on confirmation. Okay. So the ADX indicator has crossed the bearish areas on the daily time frame. That's a big thing that happened last week. Till now, only Bank Nifty had done that. The trend indicator was still bullish for the Nifty on the daily. So that has changed. But weekly and monthly, the trend remains bullish for the Nifty. Bank Nifty, the momentum continues in the sideways zone. It's already in sideways. Weekly is struggling to hold it. Just slipped the sideways zone slightly. So the Bank Nifty is not doing good. Right? So Bank Nifty ADX indicator is bearish and rising with strength, trading upwards on the daily trend, continue to be bullish on the medium and the long term time frames, but the strength of that is very flat. So we can see that there is bearishness in the trend and momentum for Bank Nifty, and there is Nifty continues to be bullish zones with respect to the momentum, and there is a divergence that can pull it up. Right, let's move ahead and see what is the OA analysis, the open interest data saying. The open interest is saying that there is support seen as 15,000 for Nifty and 15,500 for as a second level, and resistances are seen at 15,800 and then 16,000. Bank Nifty has got 34,000 and 33,500, and the resistances are seen at 35,000 and 35,500. This is as per the open interest options data. Right, but open interest future data is showing that Nifty is having a short covering, which means that people, right, so majority were on on the short side. Now they're covering that, so it's slightly bullish there. Bank Nifty, the short buildup, is pure bearishness there. That's what open interest data is showing. PCR is 1.01, neither bullish nor neither very bullish or neither bullish, you can say, nor bearish. Bank Nifty still in the bearish zone. 0.71 is PCR put call ratio. Right, VIX is as flat as last week, 14.8, more or less the same. Implied volatility is still low, IVP is still low. Right, low volatility regime continues. Sector watch. How are the sectors performing? The good thing that was seen there was IT and FMCG is performing. IT is bullish with very good strength and momentum in short, medium, long. That means daily, monthly, weekly. All charts it's bullish. FMCG, even when the market went down, it is performing very good in all time frames. Right? Metal was showing bearishness. There was a divergence of the momentum there. We already discussed that, and accordingly last week it took the momentum support and then it fell down. It could take the momentum 40 support now that it has gone to sideways and then consolidate from some period of time, and then before it can come back. Auto sector, bullish momentum that we talked about last week did not work out, and then it was gone to the sideways as well. Right? So after a few weeks of being there, probably it may take some time for it to come back to the bullishness. Pharma, infra, both sectors in the short term turned sideways, but medium and long term momentum is good for pharma, and that means on the weekly and the monthly momentum is good, but daily it has turned to sideways sector. Now foreign institutional and domestic institutions participation, how was it last week? Last week market corrected and did a V-shaped recovery in the cash, right? So when market did that V-shaped recovery, we thought all the FIIs are selling, but actually what happened was 2,500 crores of buying. Right? They had done actually they had done a good amount of somewhere near to 2,500 or 300 crores of buying happened. At the same time, earlier to that, there was some 2,500 crore that was sold. So the same amount that was sold in previous days in the same week was recovered on the last Friday when the FIs actually bought near to 3,000 crores in the cash market, and DAs were the guys who were selling. If you look at, so FIs were buying 3,100 crores. It's positive, right? The June, so the net buying for the June month is coming to 5,800 crores, and DAs are not, only people who are selling slightly. So this is on the cash. And the derivative also, if it is not doing that bad, So although there is a dip in the net longs, so the FI participation is not bad as well. They are not selling off; they are buying. So which is a positive thing to look at. What about the global market? That is where the action happened yesterday. US market had a major. There is a mistake there. Fed event. So that Fed meeting I did. I'm sorry for that. So it's a Fed meeting, federal, the central bank meeting that happened last week, and then the outcomes of that jittered the market, and all the marketing in the US market and Singapore exchange and all Asia, US, Europe, everywhere it had its slight impact. Our market also corrected slightly first day, second day heavily. That's what happened, right? So that is the major event of the last week. The major crash. The reason behind that is the US markets. But all the US markets seem to have recovered. Duration is gone. Both Dow and so showing bearish candles, but the fall is not doesn't look that bad. Other markets also recovered. We also recovered. So dollar index gained strength and showed bullish momentum. It moved from 90 to 92 levels, right? And looks like it's continuing. There is resistance in this 92.5 and 93.5. So USDINR accordingly also, US when the dollar strengthened there also, the currency pair. We discussed last week that it may be probably a good idea to go long on currency. It was mentioned in our last weekly analysis. If you look back, same thing happened, and 1.5%, nearly that much of move happened, and it is closing near to 74.3. Gold, another big thing that happened. Gold crashed like anything. Gold, when the dollar moved, gold crashed, right? Gold crashed 6.5 last week. The big wide range red bearish can clearly see in the gold charts if you see, right? So gold can be seen at a support, at a support zone. Now, since it is a buy, it's gone down. It's probably, it may be a good idea to invest in gold that time. It may take support and may not further fall down, right? It may consolidate around that area and before, and after some period of time it may come up. So from the investment point of view, probably buying gold is a good idea at this time, right? Let's move on. Actionables. Actionable is something based on how the market is doing. These are some ideas which can be taken up. So this is a bull call spread on the Nifty. Support resistances we already discussed. Based on that, you can select the strikes, right? Bull put, not bull call, bull put spread. So that that is a kind of spread that we can, option spread strategies that we can take when we are mildly bullish, right? So it is not likely that it will cross in this expiry, probably 16,000. That is the idea behind that, right? And it may not crash also. It may consolidate, is one of the basic idea. So that will put spread on the Nifty, and a Nifty is triangular 34 and 35 range with hedges, gives a good 1:1 risk reward, right? So this is again the assumption that it may not crash and it may not cross 35k also, right? Let's see. This is a brief of screenshot of the payoff charts for both the strategies are actionable, right? First one that you see is a bull put spread, and this is a triangle with the hedge positions, making it an iron corridor kind of setup for the Banknifty. This is for the Nifty, left side Nifty, right side Banknifty, right? Hope that helps. So the wrap up of the weekly analysis is that market did a shakeout of the weak hands last week, and then got back to the business, right? So that's probably is a healthy correction. Nifty will hit 16,000 sooner or later, right? But right now it looks like it's consolidating, right? Daily charts continue to show that it is at momentum support. There is also a potential bullish divergence that can move the market up only. Nifty trend crossed over to the bearishness. Trend ADX indicator showing there is a crossover that happened for the Nifty. Bank Nifty is falling off from the 20-day moving average and is having sideways movement. Trend is bearish. There are all the reasons for caution, right? It's reason for you have to be careful, but looks like there is consolidation and there may not be a crash that may happen. We have corrected enough and now it may consolidate and then slowly move to the next all-time high is what I feel like. Position in long trade therefore that does not have a clear signal to sell, neither a clear signal to short, right? For the long-term positions. Intraday, it's a global volatility regime, but I don't think that option buyers are making money because there is a lot of choppiness even at this low volatility. That is a characteristic of the bull run. Ferocious corrections happen when it is a bull run. Then it comes up again. The buy on the tips that's what exactly happens. So shorting is not an idea, right? Even for intraday buying also, it has to have strict stop losses in place. So that's a wrap up of the weekly analysis. Hope you liked it. Hope you find something useful from this. Once again, request you to kindly subscribe to our channel. It would help us a lot to motivate us to bring out more useful content for you. Please subscribe and share it with others. We need more subscriptions to help us improve the content and do it better each time. So please subscribe, like, and share, and leave us a comment. That's all. Happy learning and happy trading. Thank you.